Hello and welcome to another edition of Who Moved the Market. I am Surabhi Upadhyay. China is moving the market, in particular the metal side of the market. Now, we got to know that the Chinese central bank has lowered the reverse repo rate by 10 basis points. This was a bit of a surprise cut. The markets weren't, anticipating it, as in it wasn't the result of a interest rate setting meeting or anything of that sort. However, yes, there has been a lot of expectation that China will do something or the other to stimulate its economy because the post-COVID reopening hasn't been as strong as what was earlier envisaged. So we've got this 10 basis points reverse repo rate cut. And what it seems to have done is that it has fueled a big rally in metals. And a lot of that is rubbing off on the Indian listed stocks right here. So if you're looking at whether it is Tata Steel or Hindalco, some of the others, largely positive on the metals index today. Well, the question is this just a quick flash in the pan? Is it just a trading rally, or could it build into something more durable? To help us look at this in the right context, we've got Amit Dixit joining in from ICICI Securities. Amit, welcome to the show. It's great to have you back. I remember our last conversation was exactly 1 month ago. So good to see you today.
Hi, good afternoon, Surabhi. Pleasure likewise.
Okay, Amit, so, I'm going to straight away cut to the chase. What is going on? This whole excitement about China stimulus, that really seems to have gotten the metal traders very, very active. What's your view?
No, so metals were in a iffy zone for quite some time. In fact, Chinese steel prices were at roughly $530 per ton 2 weeks back, and there was an expectation that prices would bottom out. There has been talk of a stimulus since the year started. To be honest, since the COVID-related restrictions were removed. However, despite that, nothing on ground happened. Despite credit policies being conducive, despite whatever credit indicator you look at or credit transmission indicator you look at, it has been good. However, the activity on ground has not been really great, and things have not taken off. So, real estate, the real barometer of Chinese economy and
Uh, okay, I think we've just got a bit of a technical glitch going there. We'll just try and fix that internet line with Amit. But basically, what has been happening is that there is a lot of anticipation that the Chinese property market, which has been reeling under stress, that will get some sort of support from the Chinese government. So people are talking about all kinds of fiscal measures, not just the interest rate cuts. There is an expectation that what we saw yesterday was just the start of perhaps a bigger monetary easing. So on the monetary side, the expectation is that we'll see more interest rate cuts. And on the fiscal side, a lot of traders and market watchers are expecting a fiscal package of sorts, some sort of a stimulus of sorts, which will propel further house purchases, which can support and propel the market in China, the real estate market. Now, if the real estate market starts to stabilize and if it starts to do well, then we know that that is a pretty good sign for demand in general for commodities, particularly metals like steel. Now, Amit was telling me earlier that for steel, the going has gotten a bit difficult for China because there is a lot of export of Chinese steel in the market. So global steel prices have been under pressure as well. The anticipation is at some point in time this will turn. Perhaps China also starts looking at some sort of production control measures, basically to align the demand supply dynamics in such a way that steel prices get some support. Now, if that happens, it will be an added impetus for Indian steel companies and Indian steel prices. In fact, I think we've got that line fixed with Amit, so let's go back to him. Amit, you were telling me how, in China, you're seeing some sort of bottoming in terms of the export prices over there, right?
Yeah, so export prices, after going down to $530 a fortnight back, have bounced back to another around $580. What we have also seen that in Vietnam also prices have kind of gone up following Chinese steel prices. Also, the most important part is that Bao Steel, after cutting prices for 3 successive months, has actually rolled over the prices for August, which is a positive sign. Similarly, the second largest steel maker, and Steel, has also done the same thing. And there is a rebar region that have actually raised rebar prices. So clearly, what we see that these are the first incidents of things kind of bottoming out. Though I would maintain that these come a tad late because Chinese peak construction period is April to June. So therefore, how much impact they will have on ground in terms of real residential demand is something that we need to see. But don't forget that after COVID as well, we had a very spectacular rally after July only. However, I mean the COVID period is behind us. The stimulus is nowhere near to COVID definitely. So we will have to wait and see. But for the time being, I believe the clouds on the metals pack look to have dissipated a bit. So at least we see a glimmer of hope.
Okay. Well, you've been positive on steel anyway. I remember last time we spoke as well, it was more the steel side of the market that you liked than the non-ferrous side of it. So tell us a bit more now, if Chinese steel prices start to stabilize and if there's a little bit of pickup there, could we have some rub-off effect on prices here in China, in India? What is the domestic steel pricing market telling you? And then we'll get to steel stocks that you like as well.
So at $530 per ton, our domestic prices were roughly at were 17% premium to Chinese landed prices, and that was a dangerous level. But ever since then, last time we spoke actually, steel Indian steel producers have cut their prices in June as well. HRC has been cut by close to 2,000 to 2,500 rupees a ton, and we see that Chinese steel prices have also come up. So together now we find that the parity is back to the acceptable zone of 5-6%. Therefore, we could see that domestic steel prices, particularly flats, could see some stabilization in traders market. And if this sustains, well, for July we might see major steel producers also rolling their prices over. However, in case of rebars, we expect weakness to continue because it will be a seasonal weak period, this monsoon period. And do remember that coking coal prices have not exactly gone up. So there is the cost support is simply not there.
Okay, so basically, these long products that are used in construction, there the demand is seasonal weakness, right? Because there's monsoon, there's less construction, and maybe some of those prices might not pick up that quickly. But you do like a whole bunch of steel stocks. So let's start with your view on some of the biggers, I mean, the nifty companies, whether it's JSW or Tata Steel, and even beyond these big boys. What would be your top ideas in the steel space?
Yeah, so in the entire steel space, if you look at I mean, 1 year horizon, we believe JSPL is a good bet because of the income in ensuing cost efficiencies throughout the year and the fact that their pellet plant is going to be commissioned, their slab caster, etc., are going to be commissioned. You would see a little bit of volume uptake. So clearly, JSPL is our topic. But if you look from a shorter duration, we believe that the flat steel players, particularly Tata Steel, for instance, uh, they they will benefit. The reason being that, as I said, the flat steel prices look to stabilize. Even JSW Steel, by the way, could be the beneficiary. However, in terms of topics, as you asked, JSPL followed by we like APL Apollo, for instance. APL Apollo will gain from I mean the pre-election buzz around infrastructure, drainage, etc., or drinking water, these kind of sectors. So APL Apollo, we see possibility of volume ramp up. The third and the most interesting stock that we like is Shyam Metallics. So this particular stock, again, the company will gain from the capacity expansion as well as the thermal coal prices that have come off and iron ore prices in the country that have come off in last 2 months. So these are our three top picks, I would say, in metal space at the moment. I mean, particularly ferrous space.
Okay, just a further word on the smaller plays, because anyway, Amit, right now the flavor of the market is mid caps and small caps, right? So you mentioned some of the triggers for APL Apollo. You said some of the demand, ahead of elections as well. What about Shyam Metallics? Tell us a little more about this company.
So in case of Shyam Metallic, see they are though they are in secondary longs, but some of their facilities, it's a very interesting company that way because they are getting into the niche side of many product lines. So for instance, they have stabilized the low carbon ferrochrome plant. Their aluminium foil facility has stabilized now. These are the products products that actually give you margin. And then they have their entire steel expansion, the upstream side and downstream side, steel to pellet to steel would be complete by June. So you will start getting a benefit from that. So on one side you have the fact that your steel prices are correcting.
Hmm.
On the other side, your volumes are ramping up, so these typically will nullify. And then on cost side, we see a good relief on thermal coal prices. So they depend quite a bit on linkage coal on e-auction, and the prices have come off significantly. So they gain from there. So this is the company where we would expect to see the highest EBITDA growth in FY24. In fact, we are pegging EBITDA growth at 77% YOY,
Oh.
and this is the highest and by a fair margin among the companies we have under coverage.
Okay, Shah Metallics. So that's a stock to watch for then. Before we move on to the non-ferrous basket, Amit, just what about valuations in general when we're looking at frontline steel stocks, your JSPL or whether it's JSW Steel, Tata Steel, SAIL? How are valuations looking now, and how do they contrast with the long period averages?
No, so valuations are fairly good, I would say, and it's not that they are overly valued. In fact, if you look at the long-term averages, the valuations are in fact one deviation or half a division below the long-term average. So all the stocks from JSPL, SAIL to Tata Steel are actually trading at below 5 times at the moment, or maybe a shade above five. Even JSW Steel, if you look at FY25 numbers, it is trading below six, which doesn't happen very often. And
Hmm.
of course, Shah Metallics is a stock. If you look at FY25 numbers, that is trading below three. So on valuations, we are quite comfortable at the moment. I
Hmm.
mean, there is nothing there's nothing that we have a concern on valuations at the
Okay.
moment.
Okay. All right. So valuations are comfortable. We just need to watch for these demand trends. Now, that's a pretty exhaustive discussion on the steel side. Let's move to the base metals complex as well. And I remember you were fairly cautious on the metals per se. I mean, whether it's copper or it's aluminum in terms of demand. And if I remember correctly, you were cautious on the stocks as well, therefore, Nalco and Hindalco a month back when we spoke. Do you still hold that view?
Yeah, so we still hold that view. In fact, Hindalco at that time was roughly around 450 or it has corrected a bit. See, in case of Hindalco, unless and until we see volume growth drivers at Novelis, particularly the beverage can market, and management during the latest phone call indicated that Q1 FY24, you would see continued destocking in beverage can, a point that was highlighted by companies like Constellium as well, who are into secondary aluminum segment. And we will also see the impact of high interest rate in the US now coming to sectors like B&C, building and construction, which are really interest rate sensitive. So unless and until we see volume growth trajectory improving, in case of Hindalco, the stock performance is likely to remain a tad subdued. The only benefit that the company would get though is from the lower thermal coal prices. However, LME aluminium prices or even LME zinc prices, I mean, when you're talking about entire non-ferrous pack, if you look at that, it has corrected quite a bit. So therefore, we believe that Hindalco, in case of Hindalco, the stock performance could remain subdued for next couple of quarters as well.
Okay, but you're positive on Nalco. I think incrementally you've gotten a little more positive on Nalco. Why is that?
So Nalco, because their Utkal C block has started production in
Hmm.
April, and that could lend, that could lend to cost savings. So they are going to produce some 2.5 million tons from there, and I believe that could lead to cost savings of roughly 250 odd crores, and that is a significant cost saving. So we are positive purely because on this incremental stuff, that is the captive coal mining. Otherwise, on alumina and aluminium, we see really no price support.
Okay, got that. So to wrap things up, I'm going to come back to the point where we started, Amit. What do you think? Even if we get some more stimulus announcements from China, maybe some fiscal package or something, do you expect this current metals rally to last?
Well, that's a very difficult question because, first of all, we are not in the best of the seasons. Had this happened 3 months back when April was about to start, I would have been very, very positive. In fact, I would have bet all my money on the ferrous stocks at that time because, peak construction period in China is April to June. But now, with that peak construction period is far behind. I mean, I just am apprehensive that it should not be a case of too little and too late. But otherwise, from a trading perspective, I believe that we are at an interesting juncture. The stocks can move up further, and June 15th would be an interesting day to watch when people are expecting further cuts in the medium lending rate and also the prime rate in China. If that happens, there could be more zing in the stocks, particularly because of the fact that people would expect, that this would increase the money supply in the system. But all that we are seeing is from monetary side, from fiscal side. Still, we are seeing just the discussions around easing the real estate policies, but on ground, really, we don't see anything except for the fact that the inventory in China, steel inventory is at a comfortable level, but at the cost of really elevated level of exports. So exports, you touched upon that point. Exports for May were like 8.3 million tons, and this is the highest level since January 2016. So we are
Ah.
talking about these kind of numbers. But we have seen exports coming down in the second half of year. It really remains to be seen that how does that trajectory look like.
Okay, so plenty to watch when it comes to how China is impacting the global metals market, particularly the global steel market. Thank you very much for all of the inputs and all the critical notes there. Helps us understand the sector a little better, Amit. Appreciate you joining us on the show.
Thanks, Surabhi.
Thank you. Well, with that, we are out of time on this edition of Who Moved the Market. There you have it, the good, the bad, and the ugly of steel demand after some of these moves that China has made. Thank you for being with us. We'll see you with another theme tomorrow.